Good morning, everyone, and happy Thursday. Here we are again, every Thursday at 8:30 a.m. Jumping on here, and we are talking about taxes, my favorite thing. um, the reason for talking about taxes, in my heart and mind and soul, is that they're an inevitability, like old Ben Franklin said. Um, the only things that are what did he say? It wasn't inevitable, but the death and taxes quote, whatever it was. Okay, so I honestly don't remember the exact wording, but I think that's okay. Um, the main thing is it's a thing that's going to be with us, but there's no reason why you have to pay a single penny more than you have to. So, doing this on a weekly basis so that we can talk about what we can do to ensure that we're paying the absolute lowest amount legitimately possible. And it's a year-round enterprise, especially for my people out there who are basically small business owners. We have so many clients for whom we're very grateful to be serving. And one thing that they all have in common is they're all running some kind of a business. Most of them small businesses. Few medium-sized ones thrown in there for good measure, but one of the two things that we want to ensure that they're doing is paying as little tax as possible. It is an expense and an overhead of any business, and it's not a uniquely American phenomenon either. If you live in pretty much any of the industrialized nations of the world, everybody has some kind of a tax. Okay, that's just the way that governments get funded. So, but the United States tax is complicated enough and yet has enough interesting little nuances in it that there are ways to save money on tax. And that's why we're here talking about it every single week, Thursday at 8:30. This week just happens to be the beginning of a brand new trimester in the year. I was thinking about the mathematical division of a year, and there are 12 months, so every 4 months we tend to think of years as broken up into quarters, and then of course the months themselves. So quarters end in March, June, September, and of course the end of the year is December. But your trimesters end in April and August, and that's kind of easy to remember. They're both A months, April, August, right? The other thing is it kind of breaks things up in a bit of a fiscal way. There are a lot of people who make more money in the summer because their commerce goes up then. The days are longer, or what they do requires to be outside quite a bit. And for that reason, yeah, there are more opportunities for revenue creation in the summertime. But not everybody. A lot of businesses, like mine, basically have year-round requirements. I actually get busy around the end of the year and middle of January. And there is one other deadline that comes up besides the fourth quarter deadline for estimated tax payments, January 15th. And that is the third quarter, and that's coming up. So you haven't missed it yet. It's September 15th. It's 13 days away. And let's see. It also happens to be on a Wednesday, so we'll be talking about that one more week next week. The following Thursday is going to be the 16th, and hopefully by then everybody's made an estimated tax payment. Remember, they're the entrepreneur's version of withholding. Yeah, you have to do it voluntarily, but if you don't, it costs you more money. So that's why we hire professionals, or at least get on the Google machine and look up how to do it and who's doing it and that kind of thing. But you do need to make 4 estimated payments toward your taxes every year. If you don't, and you pay all your tax in April, you actually get punished for paying it all at once if you owe over $1,000, because they want you to pay as you go. So the solution is to make your estimated tax payments. Also, it has the extra added advantage of taking away a lot of the financial burden that occurs from paying all of it in April of the following year. Excuse me. A little rough. So Because if you say owe $4,000 and you're paying $1,000 in April, in June, in September, and in January like you're supposed to, and that's actually the exact amount that you owe for your taxes the following year, you'll actually be filing a 1040. You won't owe anything. So isn't that a good situation to be in? We think so, and that's an ideal and something that we shoot for here. So it is actually possible, and it's why we love what we do, because basically April shouldn't wipe out all of your savings. So yeah, I want to talk about the trimester, and like trimesters, I know that is most commonly in usage for a human pregnancy, but those are usually 3 months in length. So, and like a human pregnancy, the trimesters of a year also have their unique phases. And for the third trimester of any calendar year, cool things start happening. First of all, it kicks off with Labor Day, and then you have a holiday every month. You got Halloween, then Thanksgiving, then Christmas. So it's a great time of year, really. Also, things cool down, and whether or not you believe in global warming, it is science, so it's real. But I like to fool around, joke a little bit. But in all seriousness, it's been a very hot and, for the most part, dry summer for us. And my wife's an avid gardener and has been struggling to make sure that all the new trees and flowers that we've been trying to plant, she's been trying to plant. I just do a little heavy lifting for her once in a while. That's her thing. It's her passion. But it's been more work to just make sure that everything has lots of water. So, and the point I'm making here is we're starting to, at this time of year, sense a little bit of relief coming up. I know we've got some days in the high 80s coming next week here in the Colorado Front Range, and wherever you are, it's probably still going to be hot off and on, but for a little bit longer. But also, I'm starting to see yellow in my tree out in the backyard, and in fact, I was thinking about actually doing this live in front of it. Problem with that, though, is we're in suburbia and the neighbors can hear. So, but I'll be showing you some pictures and yeah, doing some things to perhaps commemorate the changing of the season this year. I really want to get out and do a little bit more of that. We have pretty things right around here in this neighborhood. So let us talk now about the meme that I posted on Monday. It's reared its ugly head several years ago. And actually, if I was smart, I would have had this up already. Let me see. I'm looking at my computer, so bear with me a second, which means I'm kind of looking down from you. So let us see. I want to go to a folder. We'll drag that over here so it looks like at least I'm not totally checked out here. Yeah, here it is. Okay, good. So this thing reads, "How smart are you?" A guy walks into a store and steals a $100 bill from the register without the owner's knowledge. He then buys $70 worth of goods using the $100 bill, and the owner gives $30 in change. How much money did the owner lose? And then it gives you 6 multiple choices. A is $30. B is $70. C is $100. D is $130. E is $170. F is $200. Now, I have seen this thing pop up on other people's social media, and I posted it on Monday. And I want to discuss the answer to this thing. Excuse me very much. So, first of all, I think any answer that's over $100 should be glaringly apparently wrong. Simply because if you took $100 out of the drawer, but the $100 remains in the premises because he's giving it back, then it cannot possibly multiply the amount of money that was actually lost by the owner. So it's got to be $100 or less. Okay, So I think we can easily eliminate choices A, B, and C. And I'm going to be honest with you, I have seen answers. I've seen all 6 people pick all 6 of these letters. And it's kind of funny, really. So when I posted this Monday, I said, it says how smart are you, but as a business owner, you should actually really be able to have some idea what this is. And if you don't, you just might possibly need an accountant. I was trying to sound like Jeff Foxworthy there. But plain fact of the matter is this. You can do a lot of semantic word interpretation. For example, how much money did the owner lose? Well, he really only lost $30 in money, right? Because that was the $30 that he gave our thief back. And then dude left with the value in goods. But is that really correct? Because the shop owner had to spend money to get the goods in the first place. And that's where we kind of get into the weeds here. But at the same time, they're not insurmountably tall weeds. I'm going to tell you that they're below waist level. You can see over them, you can see around them. It's really not that hard, okay? So here is the answer. None of the above. It's not $30, $70, or $100. Now, you have to consider that if someone is in the business of purchasing things wholesale and then selling them for markup retail and making their profit, and the difference between wholesale and retail, then they are basically an inventory business. An inventory in accounting terms is what is known as cost of goods sold. Now, this is a category on a profit and loss statement. I'm going to go from the top down. You will have your various incomes. The obvious income would be sale of product. You may sell services. Also other income, including if you have bank accounts, you make a little bit of interest from them. Other income counts as income and needs to be recorded and paid tax on. So the total of all your incomes equal gross revenue, okay? Now, you take your cost of goods sold, next category down, and these include things like the cost of labor, or COS, okay? So that would be your employees as well as your subcontractors. If you buy any materials that remain in your business, or I beg your pardon, I said that wrong. If you buy any materials that become a part of a product that you're selling your customer, and I'm thinking of some examples. We got guys in a construction business, and you have to buy lumber or rebar if you pour cement, that kind of thing. That stuff gets left behind with the customer, and it's a cost of the service that you're selling them, so it's a cost of goods sold. That belongs there. And the big one, the obvious one, the one that everybody should think of naturally and logically is inventory. You take a restaurant, okay, so you have cost of labor. People have to cook and clean the tables and serve the food to your customers, run the cash register, etc. And then you have to buy raw food for them to prepare, and that would be your inventory. And might not just be raw, it could also be pre-packaged, that kind of thing. So these things are inventory, okay? So at the end of all of your various costs of goods sold, and we call that COGS because it looks like COGS. When you subtract COGS from gross revenue, you get what's known as gross profit, okay? And then underneath gross profit, you have all the other expenses of running your business. In a corporation, this is called selling and administrative expenses, but there are other expenses as well. And it's things like the utilities, keeping the lights on, advertising, marketing, those are big ones. I can think of all kinds of them. But at the end of it all, there are specific costs to running a business, which at the end, at the very bottom, you get after gross profit, and then you subtract your expenses. You'll have total expenses at the bottom, subtract that from gross profit, and you have net income. or what has been called for many decades the bottom line. And that is what you made in a month, okay? So if you're taking a salary from your own business, your net income plus your net wage equals the amount of money that you make and what you're paying tax on. So having understood all that now, a guy walks into a store, steals a $100 bill from the register without the owner's knowledge. At that point, the guy's down $100. Okay, there's no question about that. He goes back in, unbeknownst to our poor, hapless, helpless store owner, it spends $100 that was actually his, and he is receiving $70 worth of goods. So the semantic in here would seem to say that he actually lost $70 worth of goods, but then it goes on to say the owner gives $30 in change. So that's one thing, is it's poorly worded, because basically the guy that bought $70 worth of stuff is actually buying $70 at retail value of goods, not worth of. So it was poorly worded. And the answer, none of the above, begs the answer, what is the cost of goods sold of the inventory he purchased? Okay. Now, did the owner lose the money that is expenses, such as advertising, utilities? Oh God, there are expenses is the longest thing. I'm not really thinking of anything right now. Freight, shipping, postage, all the other things. Did he actually lose that money? Well, you can't really quantify that, so we're going to say no to that. But the cost of goods sold, now he did actually present our thief with $70 in retail value of stuff that he had purchased and placed in his inventory. And since he had purchased that with money, in almost all cases, that is the way that you'll actually receive that. There may be some barter thing there, but let's assume for the most part that most shop owners actually pay for the stuff that they're selling people with money, cash or credit. So he is out whatever the cost of goods sold were to provide our thief with $70 of retail value. Do we know what that is? No, we don't have enough information. So how much money did the owner lose? The answer is we really don't know. But, I see some answers like, well, let's assume that there was a 25% markup. Like, yeah, you can assume that, but you don't know. You really don't know, do you? So what if it's something high end? And I remember a restaurant owner telling me they make almost no money on steaks. They cook somebody a steak and eggs or whatever, and they put them together, and let's say they're giving them a T-bone, like a 12-ounce T-bone steak or something. They said they make almost no money on that. There could be like maybe a 10% retail markup on that. Or there could be other things. Let's say the same restaurant owner actually sells them a soda. A soda is dirt cheap. These guys basically make most of their money on selling carbonated beverages, because you sell somebody like a tall Coke for $1.50. It probably costs a restaurant owner, by the time they buy the gas and the syrup and everything, maybe 10 to 20 cents. So yeah, they do make a ton of money on carbonated beverages, and that's why Big Food keeps us buying that stuff, because there's money in it. So that's also very bad for you, and I recommend never drinking it again, but I don't, and it's easy for me to say. So in any event, the answer to what is the markup, how much money do you actually lose, is we have no bloody idea, but if there was a 20% markup, for example, so that means 120 and 70. Okay, I'm trying to do some math for you in my head here real quick. I don't know. But let's just say, for example, that at the end of the day, he spent $50 to stock the inventory that he then sold to his thief customer for $70, then he lost $20 plus $30 or $50 plus $30 or $80 total. So the answer to this question is there's not enough information, but it is something between 30 and 100. So that's the answer. I hope you enjoyed that. Yeah, it's kind of a nice way to pass a Thursday morning. I don't see any questions coming in, so with that, I'm going to go ahead and wrap up, and it's time to go for my Thursday morning bike ride, because it's something I do every single week. And if you see me out there, please don't hit me with your car. And until next week, have a blessed day, and do something kind for a complete stranger if you have the opportunity. Take care of each other, and have a great day and weekend. So long for now.